Morning, everybody. Today we had CPI news that dropped. On days like that, we avoid, once again, trading the indices or anything related to the US dollar. So we're looking at oil right now. This is NAS on the right. And usually on Thursdays, we draw back into Tuesday's range, which is painted out by the aqua lines, which is exactly what happened. But again, we want to avoid days like this. NAS is still extremely bullish. Could just bounce off these levels and then continue up. And as far as oil, we're actually sitting right inside of a fair value gap. Not to mention we actually retraced. Oil never really moved too far away from Tuesday's range. It's been kind of sitting in it. Now we're actually in it, and now we want to see where it's rejecting, because this becomes a key level. Once it's hit it, it becomes a key level. Are we going to reject off of it and push down? But we're sitting in a fair value gap, a pretty big fair value gap, and we have not gotten confirmation to either side yet. So we're waiting to see what it does here. If it bounces off this consequence encroachment, pushes to the downside, or breaks it. NAS, I believe, has even more news dropping in about 3 hours, which is another reason we want to avoid it. You never want to get in a trade, and then more news is about to drop soon. Oil slowly pushing up. But again, I want to see what it does at these levels. Does it break the midpoint of that fair value gap? And does it get up and over the weekly range, or does it just bounce off of those and push down? As you can see, it set up all these straight lines here. So for anybody who went short here, they're taking out their stops. And there's also straight lines right down here. It literally is bouncing between the high and low formed by Tuesday. On the on the TDI, we are below the stationary 50, and we're just slightly above moving the liquid. They call it the liquid 50. We are very close to touching that 50 on the EMA. A lot happening right now in oil. Again, consequence encroachment of a fair value gap. We have the actual Tuesday's range high, and we have the 50 EMA. So if we see enough rejection here, it'll be a telltale sign that it wants to push down. But if it moves through this relatively with ease, then it could push up. London session, let's take a look there. London session, we had a bearish confirmation. We had a retracement, some gesticulation, and then an extension to at least one standard deviation. before it drew back into the range and then finally pushed during New York session down to 2 standard deviations. NAS just kind of gesticulating right at the bottom of Tuesday's range. We are slowly getting a confirmation, bullish confirmation. Still sitting in that fair value gap though. Two minutes to candle close. See if we can't get this confirmation. Most likely we will. That's a big, big push. One minute to candle close. Let's see if we close below this consequence encroachment. Even if we get a confirmation, if we close below this, we'll see a retracement happen and potentially a push to the upside. Right now it's left a lot of straight lines as well. I just want to see if it closes below the weekly DR. "13 seconds to close. Still in that fair value gap. Okay, so we got a bullish confirmation. Now we want to see a retracement. Switch over to a 15-minute on the right. There's a big, big candle. So we did close above the weekly DR, which now becomes one of these key levels. I want to see a retracement. We should be seeing some kind of a pullback. We're also in that golden zone between 61 and 79, the Fibonacci. Two minutes left for the 15-minute candle to close. Still pushing higher. This is a big candle. It's driving up to there's London's fair value gap right there with previous day's high in yellow. We want to see a push down. Okay, looks like it's retracing now. Now we want to wait and watch and see if it retraces back to here or to another key level before we look for that push up. has not yet tapped the London fair value gap. Maybe he wants to do that first, then push down, but again, we're not buyers until we see some kind of a retracement. Right now we're in sell territory, actually. Gesticulation off of that. There might be a short play all the way back into this zone, or even further to blow out the bottom here. But that's why we want to see a retracement, and then we want to see what it does with that retracement. Does it want to push lower, or is it just going to be gesticulation so it can drive higher? See if it draws back into these key levels. Bit of a waiting game now. If anybody's following along with us, please make sure you're doing it in a demo account. This is for educational purposes only. We're hoping to see again a retracement. Might want to spike up, first tap that, then do the retracement. Again, bit of a waiting game now. We want to wait for all the telltale signs to be there. Confirmation, retracement, then we'll wait for the extension. And if this leaves without us, it leaves without us. These levels were painted out earlier in the week. I wanted to see if there was going to be a retracement back into them, to the consequence encroachment. So outside of us getting a bullish confirmation, I was actually looking for the market to push down, do a small retracement from here. As mentioned before, we use all these points as confluence. No one thing is 100%. So the fact that we got a bullish confirmation, unless I see a ridiculous amount of gesticulation happening in these zones, I'm actually not interested in a buy, as I feel like this market is going to be pushing down. But we're always open to changing our bias. Just have to see what it does once it draws back. If it doesn't draw back, then again, we're safe as well. While we're waiting for that on the left side, let's take a look once again at NAS. And NAS drove right through. So it drew back to the weekly DR. And usually there's a high probability that it will do that on Thursdays. Thursdays usually retrace back to Tuesday's range. Again, still waiting. As mentioned before, I think it wants to tap London's fair value gap before doing that retracement back down. And if it just continues to push from here, that's all right, but we're not fully interested here. There's only one key level that it's bouncing off of. I like to see a little bit more confluence than that. If anything else, it's actually in a sell territory. With all these fair value gaps, previous day's high, once it hits these, then it might want to push down. For anybody checking us out for the first time, we're a new channel. We're promoting Fractal Effects, fractaleffects.com. The link is in our description. And we'll be live Tuesday, Wednesdays, and Thursdays for New York. Seeing some rejection now off London. Let's see if it taps this and just drops from here. So we already have a bullish confirmation. Our range is down here. Just waiting for that retracement. See what we get. As mentioned by most expert traders, day trading is not everyday trading. We wait for the proper setups. We wait for the right confluence. And we make a well-informed decision based off the probability. This is not gambling. We're trying to take calculated risks. Calculated being the main word there. We're seeing some rejection off that fair value gap, London's fair value gap that was created. So remember, the indicator paints all this for you guys. These are the key levels to watch when you're watching New York Open. This is the first fair value gap that was created during London Open. As you can see, price hit it, dropped, hit it, dropped. We had a bearish confirmation, a retracement, a lot of gesticulation, and then eventually it dropped. Now for New York, we are now testing that same London fair value gap, waiting for a retracement. We've already got a bullish confirmation. I'd like to see a deeper retracement, possibly into this zone, at least to the 50, but we'll see. How deep that retracement is also lets you know how bearish or bullish the market is. If we have a deep retracement, 79, 80, again, there's a lower probability here. Unless we see a lot of candles wicking. Because this is a straight line right here. It could just break right through and head down to those lower levels that I was showing you guys. NAS on the right hand side, still pushing down. We got a bearish confirmation for NAS. And again, this is a bullish market, so we're not looking for sells anyways. Another reason that we skip over this, but mainly news drop, CPI, we want to avoid that. A lot of manipulation that happens. I'm not interested in the news itself. I just know that during these high impact news days, you're going to see a lot of manipulation. Usually the market makers use it as a smoke screen to actually reprice the markets. We're at all-time highs here. They're running out of, they got to engineer new liquidity. They're running out of liquidity to take. Liquidity is the market's lifeblood. Let's go back to oil on the 15. Again, seeing some rejection off the London fair value gap on the 15, which is the same here on the 5. We want to see some displacement candles, big candles pushing down. Again, we're seeing rejection off of London's fair value gap, but we want to see some displacement candles. We want to see this thing push down. And this is sell territory. People who are looking for a sell here, I can, until I see a full retracement. I'm not looking for a buy or a sell. Ideally, I have a bearish bias, so I'm going to have to see a lot in order for me to want to take a buy here, even though we have a bullish confirmation. Remember, the narrative has to fit your story. And right now, the market is telling a different story. On the 15, we can see this big fair value gap that it left. It's already tapped it. Still waiting. It's all about patience. We did just clear out all this liquidity, so it's engineering new liquidity here. There's two things that the market does. It's either taking out liquidity or filling in inefficiencies. And when it does one, it does the other. Or right after it does one, it does the other, I should say. So right now we just took out all this liquidity. Still a little bit left. It might spike up a little higher. Clear all of these wicks. And the next thing is filling in an inefficiency. This is a pretty big inefficiency. That's where most people get confused though. They think once you filled in an inefficiency, then the next thing is probably heading back up to take out more liquidity. It doesn't have to be that way, because once it filled in the inefficiency, you forget this is also liquidity down here, these wicks. That's why we wait for a retracement, gesticulation, and then we want to see which direction it wants to go. As long as it stays up here, I'm not really interested. Let's take one last look at NAS here. We're at 8 o'clock. We'll be running the stream till 9. Or rather, I should say it's 11 o'clock Eastern Standard Time. We'll be running it to 12. NAS bearish confirmation, well below the weekly range marked out by the aqua lines. Let's see if price retraces all the way back up, and then potential push down, but again, avoiding this market today because of the news. Oil still just gesticulating in this area, consolidating. At the beginning, the indicator might look a little confusing, but once you go through the tutorial and the courses on the back end, we go over what each one of these levels means, the key levels to watch out for. And then obviously we use this in conjunction with the EMAs and the TDI. Right now we can already see some divergence happening. Let me check on the 15-minute. $15-minute is a better time frame to check if you have that divergence. No, it's actually fine right now. Price still unable to get past London fair value gap on the 15 and on the 5. About 50 minutes left in the session. Oil now driving higher. Three minutes left on the 15-minute candle. So I just swept that liquidity on this previous liquidity. And let's see if it wants to push down from here, and if it was just a liquidity sweep, or if it wants to continue up. Still driving. Now we've already made it to 2.5 standard deviations above the range. This was an extremely bullish push. Still interested to see where this candle actually closes, though. It keeps pushing after this. Can I get a thumbs up in the chat if you guys can hear our audio, if all the audio is perfect, if you're hearing any kind of distortion. Oil on the other side now of that London Fair Valley gap. Swept all previous highs, relative equal highs, I should say. Took out all of this. Again, we have yet to get in. We were waiting for a retracement, potential buy, but the market may have left without us. Still seeing if we get that retracement. This candle is yet to actually start driving above now. A little under 45 minutes left in the stream. Still paused there. Let's see if it was just a liquidity sweep or if it wants to keep driving up. If it leaves without us, it leaves without us. It's okay. Okay, we're seeing a bit of a turnaround. Let's see if it gets below this London fair value gap and continues to push down. Or if it just bounces off of it and continues up. Since my bias was already bearish, unless it does a deep, deep retracement, again, not interested in this market. We'll take one last look at NAS. We are seeing a displacement candle now. Let's see if this actually, again, pushes past London's fair value gap and drops. So then let's take one last peek over here at NAS. NAS, this is on the 15-minute. Let me take a look at the 5. So again, with NAS, we got a bearish confirmation. We did get a retracement back into the range. Remember, all these are key levels, the dotted line. That's the closing of all candle bodies in the range. And then we have a gray line here, which is the wicks of the candles in the range. So we did retrace partially. I would have liked to see a deeper retracement to take out at least these highs. Maybe it'll still give us that, but partial retracement and then an extension seems to be moving, most likely to 1 standard deviation would be the goal on any other day. Obviously, on CPI day, we avoid this. Let's go back to oil. We're seeing a wick now. Market having a tough time pushing down, but we are below London's fair value gap. So this could have been potentially just a liquidity sweep and a push down. But we'd have to see more wicking on the other side of this fair value gap. On the 15, it's almost an engulfing candle. Not quite. Let's see if it digs in deep. A little over 30 minutes left in the session. Bit of a waiting game now. The other reason we avoid news days is the probabilities drop in our strategy. Now we're on the other side of that London fair value gap. See what happens here. Are we going to reject to the downside from here, or is it going to push through again? Enough gesticulation here. Be a telltale sign that this thing wants to push down. But we'd have to see. Driving higher. Three minutes, 28 seconds left in this candle. I want to see where this candle closes. If it closes down here, there's a potential chance that we've gassed out to the top, taken out all this liquidity, and might want to push down. As mentioned before, my original bias was bearish. I actually wanted to see the market turn around from here and head right into this zone. Could it do that all the way from up here? It could, but we got a long way to go. Now I have to see a lot more gesticulation happening here. But we do have a bullish confirmation. We'd like everything, all of our confluence to line up. If we're going to go short, we want to see a bearish confirmation. We want to see all the telltale signs. Now this thing is pushing. It's better to take a look at the second phase distribution. First phase is the rejection, liquidity sweep, rejection, and then push, and then we always have a little bit of a pullback, and then another push. Again, we want to see displacement candles to the downside now. "30 minutes left in the stream. That looks like a strong displacement candle. Again, just bouncing off that zone. This fair value gap here. Let's see if it bounces off London fair value gap again, or if it pushes through. Or above the weekly range. Just got to be patient. We want to see, again, a retracement into this area, and then see if this thing wants to go long, or if it's just going to crash right through and head for consequence encroachment of this range down here. Looks like it's doing another drive up. As mentioned before, if it leaves without us, it leaves without us. I want to see if there's more rejection happening here. One minute 37 seconds left on this candle. Ideally, we want to see this candle close below this London fair value gap, which is painted out by the indicator. This is a breakaway gap here, so if the market is extremely bullish, we will not see this area get tapped. We have 5 minutes left in the stream. Still waiting to see. We push right through London's fair value gap, or if we get another rejection candle here. 15 as well. 9 minutes left on the 15. We want to see a displacement candle to the downside if this thing is going to push down. It's going up. And we want to see it break this fair value gap, London's fair value gap. Drive. We've already reached well over 2.5 standard deviations to the upside. So there's not much meat left on the bone. So even if it did a pullback, I actually would not even be interested in a buy. Especially after clearing all this liquidity here. Now we don't want to go against the grain. We have a bullish confirmation. We're well above the weekly range. So even if it dips down to take out all this liquidity, it'll most likely happen after 9 o'clock. If we're not in a trade by 9 o'clock, we do not engage. My job is to make this as easy as pie for you guys. 7:39, between 7:30 and 9 o'clock. We want to get in, we want to get out. That way people still have time to go off to their job, drop off their kids at school. I'm trying to create a system here for the everyday person. Still seeing rejection off London's fair value gap. These are good telltale signs. We went above, swept liquidity, pushed down. Now it's just going to gesticulate here. We'd like to ideally, again, see some displacement candles to the downside. Seeing rejection there, 15-minute candle. There's 4 minutes left. Just on the other side of that London fair value gap. Not much movement. Want to see that displacement all the way down. Again, we are in sell territory. Ideally, we'd like to see the market push, take out these lows, tap this zone. Right now it's creating buy-sell orders. You can see wicking to both sides. People who are long and people who are short. This is a second opportunity for people who are already long. They're seeing all this wicking jumping in here. And then again, people that are going short off of this London fair value gap, previous day high. That's why the market likes to pause in places like this, muddy the waters. About 15 minutes left in our session. Just a waiting game. New 15-minute candle. I still think this thing is going to push down. How deep is the question, though? Is it going to pull back into this range, gesticulate, push up? Or is it going to crash right through? Third option, it's just extremely bullish. It does not do any retracement. It pushes all the way through. But if we see enough gesticulation happening here. Okay, we're getting some movement up. I want to see if it breaks London Fair Value Gap one more time. Two minutes left to closing of this candle. Still getting rejection off London. 12 minutes left in our stream. I'd like to see a push in either direction before that time. Ideally, we want to see this push down. Let's see if we break that fair value gap. Thirteen seconds left. Driving higher now. 3 minutes left. Close of this candle. A little over 2 minutes left. Six minutes left on the 15-minute candle. A little under a minute. Again, just muddying the waters. Let's see if it closes below previous day's high and within this fair value gap. Five minutes left in our stream. Still getting gesticulation in that same area. Three minutes left on this candle. And again, if the opportunity does not present itself, we do not just jump in haphazardly. Too many traders jump in just because they think, I'm on the markets, or I'm watching the markets now, I have to take a trade. You don't have to take anything. The perfect opportunity does not present itself, you just walk away. This didn't really give me the retracement I wanted. Not to any major key level. If anything else, like I said, stuck in a London fair value gap, just swept relative equal highs, and it's bouncing off of the previous day's high. So this is technically sell territory. But now that we already have a bullish confirmation, I'm not interested, plus the fact that we're 3 minutes away from 9 o'clock. If we're not in a trade by 9, walk away. Look for another trade tomorrow. Still just gesticulating there. Got a minute left in our stream. Getting some push to the downside. Fortunately, this is probably one of those moves that's going to go more or less into 9:30. So I just want to say thank you for everybody joining us. And again, we will be live Tuesdays, Wednesdays, and Thursdays for New York Open. A little later than New York Open. We go live right around 10:30 Eastern Standard Time. But that's when the majority of these moves set up. The whole purpose of this strategy is to create more of a comfortable way of trading as opposed to just scouring the charts and trying to find a trade. We like to hone in and focus our attention in one specific range, one specific time zone. So thank you for joining us. Again, Tuesday, Wednesdays, and Thursdays, and please check us out on fractaleffects.com if you're watching the stream at a later date. Hope everybody has a good start to their day. Take care.